My name's Sam Halse. I head up the customer relationships team for a global payments company called Adyen. First, I'll give you a little bit of background on who we are and what we do. So, we help large international customers like Groupon, Uber, Vodafone accept payments from all over the world from any type of sales channel. Whether that be online, mobile point of sale, or a physical point of sale solution as well. We offer over 220 different payment methods around the world. We have our own Visa and MasterCard acquiring licenses, local acquiring solutions across the globe as well. Adyen was founded in 2006 with the real vision to innovate the payment space. It was a space which had stagnated for quite some time, kind of dominated by old legacy platforms, and the founders really saw an opportunity and a need to innovate the space. I'm going to refer to three themes today in my presentation. One is the shopper experience and how important that is throughout the payment process. Secondly, globalization and how you need to tailor your payment strategy because of that. The third thing being granularity, so breaking down different components of the payments process to ultimately increase your revenue and your bottom line. So at the very top level, it's a simplistic thing, right? You have someone buying something, you have something selling something, and then in the background, you have something going on with payments, and at the end of the day, the money kind of falls into your bank account. So let's say you're a normal UK retailer. This goes well for the first 6 months, and then you decide, oh, I'm going to expand to Europe. What happens then? The key thing there is that each country has its own payment culture. Take the Netherlands, for example. Over 70% of what people process in a retail situation is Ideal, which is an online e-banking method. Now, the reason for this is that there's not a credit culture in the Netherlands. Everyone pays off their credit card every month. It's not like you wait 6 months, get 10% interest, etc., etc. The same way in Brazil, for example. So, a huge payment method there is what's called boleto bancário. So, you get a form with a barcode, you print that out, you go to a local tienda, you pay cash for that method. They then send a message back to the payments company, to the merchant, and then they will ship the products. The key thing here is before you go into a market, really understand the different things within that market. Let's take, for example, historically in Belgium, Mr. Cash. It was a debit card, it was 3D secure mandatory. If you're a recurring business model, i.e., there's no shopper interaction with the second payment, it was a very hard payment method to use in that market. So after that person's expanded to Europe, they may look at their acquiring and saying, yeah, in Europe this works really well, we're going to go further afield, we're going to go to the US, to Asia, possibly to Latam as well. They will set their platforms live with the same acquirer they're using in Europe, but what they're going to see is they're going to see high refusal rates, maybe 5-10% higher than what they see in other markets. They're also going to see surcharges on their shoppers' bank statements. They're going to say, why is that? Well, the shopper's own issuing banks are going to levy a surcharge because an international acquirer is being used as opposed to a local acquiring bank. One step further, take Brazil for example. In Brazil, it's very usual to use installments on your credit card transactions. It could be 1, 3, 5, 10 installments. So this is only supported by the local acquiring banks. To take it one step further and get even granular in Brazil, the acquiring platforms aren't as stable as what they are in Europe and in the US. So you also need to have live switching with a backup Brazilian acquirer as well. If you don't have this, then you will lose thousands upon thousands of reals in revenues every month. Now, you've expanded internationally. You've got those links set up with your acquiring. Then what you focus on is coming back to Europe. You think, hey, this is really my main market. This is where I'm doing the majority of my revenues. How can I improve this? So what we see in certain countries is a huge uplift in authorization rates if you use local acquiring banks in those regions. Take Spain, for example. We have a local Spanish acquiring solution in Spain. We recently did a test with a large global player. We saw a 3.8% increase in their authorization rates because they were processing their Spanish cards via a Spanish acquiring bank. Now for them, that means an increase in millions in their bottom line every year. In the same way in France. France is a strange market in that outside of the normalized Visa and MasterCard acquiring network, there's a network called the Carte Bancaire network. Now, this means that there is about 3 to 4% of cards which can only be processed over that specific network. So if you don't have local French acquiring, those cards will simply get refused. It could be happening today in any of your businesses without you even knowing it. On top of that, we also see an improvement in authorization rates if you process those local French cards via a local French acquiring solution. This graph really illustrates, some of the numbers and what you see in specific markets like Brazil, India, and like we've talked about, Spain and France as well. One interesting thing here is you see in Singapore the fact that international acquiring might be better than local acquiring. The rationale for that is a number of banks in Asia mandate the use of 3D Secure across the board, and they also don't have as much functionality in place as what local acquiring banks. So you see that what we see across our platform is better success rate with international acquiring. So you've done all those things, you've got your acquiring working well. Now what else can you optimize within your payment flow and strategy? We've talked a little bit about routing and what you can do with different acquirers around the world with using local payment methods. The next key thing we believe as a company, which is hugely important, is risk management. Now, historically within the industry, there was this thing, let's not have any fraud, we don't want any chargebacks. We look at that in a different way. What we want to do is maximize people's revenue. So we have a fully built in-house risk system, and let's say you're refusing 2.5% of your transactions today. What we want to do is lower that figure to 1.5%. If you have 20 base points more chargebacks or more fraud across the board, then you still have some gain on your bottom line. The key thing is to stay within allowed Visa and MasterCard rates. A huge thing within the industry and always been seen as a conversion killer across the board is 3D Secure. Now, what we've always tried to do as a company is use technology in a smart way to innovate and to drive people's revenue. So we've developed what we call dynamic 3D Secure. Now there's different approaches to this. One, you can do this via simply issuing countries. So if a transaction is received in the UK, you route that to 3D Secure. Across the board now in specific countries, the UK being one because 3D was adopted very early on by the banks, and now because issuing banks in the UK like to see 3D Secure processed, and in other places like India, we see an increase in authorization rates if 3D is used. It can also be used in other situations. So above a certain fraud score, let's say a scorecard of 100, so above 80, a riskier transaction, above a specific amount, if your average transaction value is normally 50 and the transaction is for 500, then process that through 3D Secure. Now, where we're getting to with our whole risk system, and we want to move to with 3D Secure as well, is really looking at the whole shopper life cycle. Historically, fraud was looked at what happened with that one transaction, but we're moving to looking at what's happening across the whole board. So what has that shopper done before? How many email addresses have been used with that credit card before? Has that IP address been used with that person's cardholder name before? And in the same way with 3D Secure, if you've had one credit card or an email and a credit card which matches that has been used on your site 4 times in the previous 6 months without a chargeback, without receiving a notification of fraud, then process it without 3D Secure. In that situation, we believe there's not as much risk. The only real risk being that a non-fraudulent chargeback is received. One of the last things I'll talk about in optimization is refusal reasons. Everyone knows there's a huge craze with big data and using your data effectively. In the payment space, it's hugely important that you take the raw data you receive from your acquirers or your payment partners and really utilize them. One, in your payment flow. So let's say you receive a refusal code, insufficient funds. What you can do in that situation is, one, offer a payment page where someone can fill in a new credit card and update their credit card to an alternative credit card, or offer an alternative payment method. In the Netherlands, offer Adyen. In Germany, offer Sofort Überweisung, for example. So then you don't lose that shopper from the payment flow. Another important thing with refusal codes is to understand the behavior of what's happening. If you have a subscription business, for example, and you started out maybe 3 years ago, cards were being registered, what's going to happen over that life cycle is you're going to start seeing a lot more expired cards, throughout your business. So use the new technology. Use things like Visa account updater, which we have live on our platform, so you can automatically receive card updates from the card schemes. This will lead to huge increases in, one, your bottom line, but more importantly, the life cycle of your shopper. You're all spending a lot of money to drive those shoppers and sign them up to your subscription model. So try and use every piece of technology to keep them with you as a customer. So you've done all those optimizations. You've got your acquirer routing in place. And then the mobile revolution happens. What we see now across our platform is 17% of transactions we receive come from a mobile device, both a tablet or a smartphone. This was up 27% on the quarter ending June 2013. We believe this is only going to continue over the years to, in the next 5 years, over 50% of the transactions we receive will be from a mobile device. Now, we look at mobile as a separate part of the payment process, as you should as well. Have a separate strategy for mobile. Make sure, like Groupon, we rolled out internationally with Groupon across 37 countries. One of the key to their success was the fact that they stored credit card details using tokenization on our platform. Their shoppers could then easily check out with a click of the button, or in riskier cases, so more high-value deals, with a CVC code. In the same way, look at your payment methods. Make sure, are they mobile friendly, for example? A lot of online e-banking methods and things will redirect you away to an external page and then redirect you away to an external bank. For your mobile shoppers, if you look at your conversion statistics, it may be better to not offer those methods on a mobile. Now, it's still important to get regular updates from your partners. Adyen in the Netherlands, for example, has just rolled out 2 banks which have mobile-friendly versions. So work with your partners to get updates on what specific methods are mobile-friendly and which aren't. So this big retailer has done all these things. They now have their mobile-friendly payment pages. They're storing card details to make it easier for their shoppers to check out. The next thing on their list is multi-channel, omni-channel. How do I link my online sales with my mobile sales, with my physical point of sale sales as well? So the benefits of doing this are, one, unified reporting across the board for your operations teams, for your financial teams. But more importantly, it's the shopper experience as well. You can use the same kind of loyalty programs. Someone who buys a pair of jeans online can then return it in the store. The shop assistant is using the same back end. So let's say 3 months earlier, a shopper called John has bought a sweatshirt. That shop assistant can see that in the back end. It makes it a lot more personalized shopper experience across the board. What we've also seen is the use of mobile point of sale and queue busting. We've rolled out a large pilot with the Selfridges of the Netherlands called the Bijenkorf. So what they've really used is to make it a personalized shopping experience. So someone who's buying a €500 Gucci handbag, they really get a nice personalized experience. Someone selling them with a tablet rather than queuing up in the same line of someone buying a pair of socks or underwear. In the same way, it can really be used to get people through the doors in peak selling seasons, Christmas, in all those types of periods as well. So, if we look at this diagram here, this is what the traditional payment network looks like. My friends often ask me, what do you do? I say, I work in the payments industry, and they say, oh, what does that mean? So trying to explain the complexity of this is very hard, but this is what it was like historically. You had a PSP, a risk platform, an acquiring bank. For your point of sale, you have a software provider, you have a terminal provider, and then you're linking all the way through processing platforms to Visa and MasterCard, then to the issuing banks. It's a very, very, very complex environment. So what we've tried to do as a company, and we believe others will do moving forward, is to really simplify what is a really, really, really complex environment. You guys can spend more time working on your conversion, working on driving your revenues. What we have is a gateway, direct acquiring across the board, risk management, and a whole multi-channel solution in one platform. Thanks very much for your time. I'm happy to answer any questions that people have.